I hope I never need to touch my metal. It's not just for an emergency, but if not, I know that when I give it to my children and God willing, their children get it, long after the dollars in my wallet are hanging from a frame in the Smithsonian as an example of what used to be gold and silver, will still be immutable wealth the way they have been for 5,000 years. And I think if you look at it that way, more historical context, I think it's easier to deal with the fluctuations, the volatility, and even the counterintuitive nature of this market over the last few years. Well, I think first, if you're talking about demand and supply, it would be a mistake to not start at the very top. The one thing that's kept me most optimistic that we're on the right path is less the price, and again, looking at it from the way that the people who are looking at it as an investment, a little disappointing. You think it would be doing better. But what I would say is that if price were a true reflection of demand, then there's another story here. And that story is, for example, the London Metals Exchange, a 140-year-old exchange, has the lowest amount of silver inventories ever in the history of the exchange. And they recently came out a week or two ago saying that if silver deliveries off the exchange happen in 23, the way they did in 22, that there won't be enough silver left. The COMEX market, the US epicenter of silver and gold and all commodities, has only 33 million ounces in the registered category. That is the category by which all of the contracts that are issued are based off of. If people stand for delivery, they come out of the registered category. The biggest money in the world has been withdrawing metal from the top on down, not only off the LBMA, or the COMEX, but also draining it out of the silver ETFs very quietly. It's called share redemption, where very, very wealthy people who have large amounts called baskets of SLV as an example, or GLD, can actually redeem the shares for metal. But most of us can't do that. You have to be one of the very, very top. But what I guess I'm seeing is front running, first from the very top on down. And when you realize that in order to pull metal off of these exchanges, you need to be very sophisticated and very wealthy. And once it leaves the exchanges, which is a unique characteristic to what we've seen in the last few years, where it leaves the ecosystem, it loses all industrial liquidity, meaning it's a one-way ticket. It's probably part of the 300 million ounces that were sent to India, or part of the 400 metric tons of gold that were shipped out of the West to the Eastern Central Banks in the third quarter. Because when you lose that liquidity off of the exchanges, meaning if Elon Musk says, I'll pay a $20 premium for every ounce that people want to sell of their 1,000-ounce bars in COMEX, if it has left the COMEX chain of custody, to get it back into the chain of custody would require assaying and time and expense that would make it unrealistic. Now, if we translate into what it has meant in the retail industry over the last 3 years, it's really been the central theme of most of what I've talked about on the industry side, is that it was becoming impossible to get. And it was where normally we would have inventory in stock at all times. We had to pay for it 12, 16 weeks in advance, hedge it, and run logistics from all around the world to get it in. And by the time it came in, it was already front sold. So getting product when you realize that only 0.5% of the entire US financial matrix is invested in metals, and getting it has been the biggest challenge of anyone in my position of what we do. It certainly doesn't, it's not reflective of the price. The demand has been off the charts from the top on down. And the price, while it's hung in there in dollar terms, is not reflective of the demand, I think, from the very, very top, even all the way down to the retail consumer that I deal with. I've always known that talking about manipulation in this industry was viewed kind of, it was gray, right? Well, when you see JP Morgan pay a $920 million fine and admitting guilt for suppressing the metals market, you have to understand that these markets are being suppressed by a handful of bullion banks. And for whatever the reason is, you can see it in the charts, you can see it in the admission of the guilty traders of JP Morgan, and there are a million other ways to definitively say, and non-objectively, that the price has been controlled. And I do really, truly believe that the price has been controlled. But here again, I really do believe, Charlotte, I really truly do believe that it is being controlled specifically for the biggest money around, at least right now, to reposition. And you can see that. You can see that the biggest money is draining the exchanges, is accumulating metal. They're front running what is coming next. And so as far as the price and it not being what we thought it would be, again, what is betraying the price and what is betraying the rhetoric is the huge accumulation from the top on down and the difficulty getting product, and I don't see it getting any better. I really don't. Well, the central banks bought more gold last year than at any time in the last 55 years. So, but it is not just those. And there's a what do I call it? It's called the Commitment of Traders. It's a report that's published every week by the COMEX, and it shows the positioning of the largest traders. And it used to only show the positioning of the commercial banks on one end and the hedge funds called the speculators on the other, specs and the commercials. And then in 2020, out of nowhere, a third group of reportables appeared on this report, out of nowhere. I've been reading it for years, and there was only these two, and it's called the Others. And the Others are believed to be sovereign wealth funds and family offices, the most well-funded, well-informed private money on the planet. And they have been systemically and systematically draining all of the exchanges. And from the top on down, that's what I mean. When you're taking possession and deliveries off of COMEX, you have to be very well funded and very sophisticated. So these are not mom and pop traders. And I don't know that these are central banks either, but they are very wealthy private investors that understand what's coming. Do what the biggest money in the world is doing. De-dollarize. Mitigate your exposure to the dollar, get out of debt, and own precious metals as wealth. To whatever capacity you can. You don't need to take possession of COMEX contracts. You don't need to spend millions of dollars to prepare. You do it however you can, whenever you can. When I started in this industry, I was 20 years old, barely. And my father and I started the company with one rule, he told me, one rule that stuck with me to this day. I own the company. I've owned it, for a long time. He's not going to fire me any longer, but the promise was I have to buy something every 2 weeks or he'll fire me. Well, when I was 20 years old, I could deal with that. I'm 52, so 30, however many years later, 33 years later. I've never missed a 2-week period ever. And I own and purchase every 2 weeks. I buy gold and silver, and some weeks it's a lot more than others, and some weeks it's a couple of silver coins. Whatever it is, I've honored my promise, but to me, it's the greatest gift he's ever given me. The understanding of paying myself first, of saving, and putting away what I consider to be wealth. And so you don't have to make massive purchases. You just need to pay yourself first and look at it as wealth.